Hello, so it's the 1st of May. It's a holiday in quite a lot of the world today, which has led to certainly some thin liquidity this morning, and most of Europe are on holiday today, apart from the UK. And of course, nobody's rushing into positions with the Fed later today. That really is the big news of today. So we need to be a little bit careful. I'm not sure that it will be much better. It's Chinese bank holiday as well in Asia last night and tomorrow. And so we're not going to see any demand for Chinese ETFs, which is going to help offset this selling, unfortunately, until that is over. And China, in fact, is on holiday until the start of next week. So that's not going to help us. Now, let's talk about why we're selling off. We have seen a lot of long liquidations, but the biggest problem seems to be that the miners have started selling, and we have also seen outflows from the ETFs. Now, when you think about it, these ETF positions, they really kind of got ahead of themselves, and it was much different price pattern that we saw than we have seen going into previous halvings. In fact, if we look at the halving that we had in 2020, we were very choppy sideways and pretty limited. Yes, we were pretty close to the highs, but when we were not super stretched at all-time highs. Same thing when we look at the halving that we had in 2016, which is this orange line. You can see that we had not exceeded the highs from 2013. We were kind of halfway back and going pretty sideways. What we do notice from these previous halvings, we were pretty sideways into the 2012 one as well. What we do notice from these previous halvings is that afterwards, we either go sideways or have a pretty nasty pullback before we continue higher. So what we're seeing is not unusual, and I think it may feel bigger than previous pullbacks simply because we got so far over the front of our skis, if you like, or got a little bit overhead of ourselves with the US ETFs. And what we are seeing is these liquidating. So according to crypto quant data that I've seen, I think that the average cost price of most people holding Bitcoin at the moment is at 63,000, and they note that in previous bull runs that you don't kind of tend to pull back more than 10% below that, which would put us back to sort of 55, 54,000 if this stays as a bull run according to their analysis. I'm going to go back to the regular weekly chart of Bitcoin because I've been kind of reassessing how I count this. Now, previously, I had counted this as this first swing from the low in November 2022 as the first 5-wave swing, and then we had a big 3-wave correction. And then I was looking at this. Let's hide these. So big 3-wave correction, irregular sideways correction here, that lasted quite a long time. And then I was thinking this is wave 1, 2, 3, we're in a wave 4, and we're going to see another wave higher before this wave 3 is over. However, other Elliott wave people I've spoken to see this as a wave 1, this is a wave 2. This was the first one of 3 with a very deep retrace because we didn't make a new low, which means that from the low that we made in June 2023, we now have 5 waves up from here. 1, 2, 3, 4, 5. Now, if that's the case, we should be counting our retrace levels from this low in 2023. And if we put that on, the most common retrace of a wave 3, common, not always, that doesn't mean that's always the one we do, but the most common retrace is a 38.2 FIP, which puts us back here to 55,000. And if I count it from this low, it's kind of around there as well, isn't it? If we count this most recent swing, this extended wave 5, 56,000 becomes the 50% retrace of this most recent swing. So I would not be surprised to see some support around this 55,000 level. If we extend that and say, actually, this is a whole completed sequence from the lows here, then the 38.2 is a little bit lower at 51,900. And this does line up with these lows. So we could, it's very common for Bitcoin to spike through levels and then recover them and hold them a little bit later. So the next support, if we reassess the way we count this, potentially is 56,000. Remember, that's 50% of this most recent swing if we're going level to level to level. But where I think more likely that we're going to bottom is 55,000, around there. And then I'm still seeing us continue higher. Let's take these fib retrace levels off though, and let's hide this for now. Because one of the most important things people often ignore in trading is the timing factor. There is very often, between these swings and these corrective waves, a relationship in time. We can see this very clearly. Let's zoom out here at the previous bull runs around these halving cycles. For example, if we go back to the rally from the 2015 low to the high that we made in 2017, this was 152 weeks. And the low that we made in 2018 to the high that we made here in 2021 was also 152 weeks exactly. And the corrections between them, between 52 and 54 bars, this one here was 58 bars back in 2014. So these are kind of really reliable patterns. So I don't expect this. I still see this as a pullback in a bull run. I don't expect that this bull swing will be over until we get to July 2025. So we've still got more than a year of this to come. And the best bit, you know, this is a pretty nasty shakeout now, but we need to remember that the best bit is yet to come. So it's just a matter of where are we going to come back to. Now let's talk about worst case scenario, which I don't like to do because I don't want people to put people off. But if this here from the low in June, on the 12th of June, is in fact completed 5 waves up, it is not crazy to retrace back to the start of the 5th wave, the bottom of this wave 4, which would mean we're back at 40,000. So could we do that? I think it's really going to depend what happens in the rest of the world, to be honest. And that we might get a little bit of more of a hint of that with the Fed tonight and so on. So for now, I think pretty key and pretty important trend support based on previous bull runs at 55,000. And if we just see a shallow bounce and that lose that level, or if when we get to 55,000, right, and all we see is what we've seen here, 3-wave rally, 3-wave rally, then if all we do is a 3-wave rally, don't make a new high, we are likely to continue, and, you know, 50,000 and lower and bigger moving averages come into play as support. So that's how I'm seeing Bitcoin. So how do we trade this today? Well, we kind of wait for that level and we wait for the Fed and see if we get a nice buy signal. For me, you know, I'm watching this on lower time frames. It's a 15-minute chart. We can see here pretty clearly we are still in a very clear downtrend. We're getting rejected by these 15-minute moving averages until we see a double bottoming pattern. So a double bottom, a bounce that takes out the previous swing high. We're starting to flip these lower time frame moving averages. I'm afraid we're still going down, and with China closed and a lack of perhaps buying from Asia, I think we may have to wait until the start of next week before we see a bottom. So pay attention to what's going on, but be careful out there, and certainly be careful. This is not a time for a great load of leverage. You need to avoid leverage. If we get any kind of a run that resembles previous post-halving bull runs, you won't need leverage. It's going to be really good for everything. Now, if we take a look at what's happening in the broader markets, Bitcoin is falling quite hard. Not everything is falling hard. There are some stuff that looks pretty bouncy, but Bitcoin really drives the bus. And until Bitcoin bottoms, it will be rare. It would be rare, let's just put it that way, for the few that do bounce. There are some like Optimism which are kind of doing pretty impressive moves, but even that, everything is a little bit of a pullback, and so we need to be a little bit careful. So trade carefully. Let's go back to this halving. Remember, just keep the big picture in view. Post halving, it is very normal to have a little bit of a shakeout. We did get pretty far ahead of ourselves, and the best is yet to come. as you know, I've been watching Bitcoin. And this is quite interesting because ETH, if you see ETH here, no new lows in ETH. If we have made a big three-wave correction, we're holding these previous lows. I do think there's room to go for us to go a little bit lower and back to the daily 200 moving average. But the chart I'm really watching is ETH against Bitcoin. And the reason I'm watching ETH against Bitcoin, let's look at Bitstamp because it has such good history. Let's go to the weekly chart here. We have made a very nice textbook equal measured move in ETH against Bitcoin. We are holding this measured move level exactly, and I'm watching for this to build a bottoming pattern to tell us that ETH is going to outperform, because that is really a classic signal of a altcoin run, alt season. So now we stalled at these previous highs. That means that we have not made a reversal. But we have stopped going down. Our moving averages here on the daily are flattening out. So a higher low with an inverted head and shoulders pattern, something like that. If we continue lower, a double bottom, something, even that would be a pretty nice bottoming pattern. This would be a pretty nice bottoming pattern. Anything like that, that's what I'm watching for. And if ETH starts to outperform Bitcoin, then so will Solana, and so will quite a lot of other alts. It's like a really good indicator. At the moment, some stuff, you know, like are underperforming Bitcoin and falling harder. For example, Doge, not looking very pretty. But yeah, just on bad days like this, it's really important to try not to sell the lows. We said it, you know, a month ago, to reduce leverage and wait for this period to play out. So stay away from the leverage, keep an eye on what's going on, but don't feel any kind of FOMO need to rush in. You know, whenever we make a, look at here, like it looks like we have a huge rush in here, and you it's so easy when you see that, when it's been in a long downtrend and you haven't seen a really good buying opportunity or anything worth buying for a while, to think, oh gosh, it's all going to go without you, miss out. You know, let that first swing go. There will always be a pullback. If it's going to keep going, there will always be a pattern or a pullback and a higher low, something like that, to buy. But that's what I'm watching for. And when this does bottom, then we can say, yeah, these altcoins may have a little bit of a run, and that would be good. Okay, good luck. Let me know if there's any coin you'd like me to take a look at. I will do a bigger update later, but we really kind of need to get the Fed out of the way and see if this is going to turn into bigger carnage or not. When I take a quick peek at these stock indexes, I have to say, ahead of the open, we'll look at the NASDAQ because that's the most correlated with crypto. And for me, you know, we've been going sideways here on the weekly for a couple of weeks into this Fed meeting. And we're at one of those levels. Look, this looked to me like a very nice three-wave correction back to the daily 20 moving average. That's pretty bearish. But you're never going to go down in a straight line. So you're going to need to look to where is the first bounce to be. If I go down to this 4-hour chart, this looks to me like a very textbook three-wave measured move, doesn't it? When you have that, you put your fib retrace levels on both swings. So if I do that here, you can see that we're perched sitting on this 61.8 fib. By my rules, that's one of those places you tend to bounce, and you tend to bounce quite big if you get above this 50% level in the middle. So we're at one of those levels where if we get back above 17,500, we will likely rally up here to 17,630. Back to back test these moving averages and potentially a little bit higher. So what I wouldn't be surprised at all to see is a little bit of a bounce today, and then potentially, you know, if we're just going to do a bigger three-wave correction, so we do 3 waves up and then we do 3 waves back, something like this would be a bullish Gali. And I wouldn't be surprised, you know, start of May, they say sell in May, and we're still in earnings season, and there are lots of things that can move us either way. Not for sure for me that we are, you know, in a death dive lower. Although I think that ultimately we may have to see a little bit lower before this is over. If we take the more bearish view, then we would say, well, this is a classic bear flag, like this. And, you know, if we get underneath this previous swing low here, which is also where that 786 fib is, yeah, we are probably, you know, in another swing lower, and let's move out to where our pullbacks are, because if we look at this daily, we are likely to come back to this daily 200 moving average, which was really good support when we did this in October 2023 ahead of the Fed. This was the Fed pivot point. So that would bring us back to 16,800, and likely 50% of this bigger swing that we are in here in the NASDAQ. So if the NASDAQ's on a little bit of a bounce level, it's possible that we are in a little bit of a bounce level in Bitcoin and crypto too. Just don't assume that that's the bottom yet.